Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to our trading room recording on Monday, the 20th of September 2021. It's my first recording for just over a month, guys. I needed a bit of a break. I've been doing these constantly for 3 years and needed a bit of time off to do other things around the house and to look after my parents and one thing or another. Anyway, time to get back at it again, and we're just starting today with our usual overview of the markets. Now, obviously, because I haven't been doing this, it's going to take a few days to get myself up and running again, get au fait with what's going on, and then start to look for opportunities. But that's the whole point of doing these, guys, is just to show you what goes on in the background rather than just talking about the things that we've discovered. So it's about helping you understand the work that has to go in order to determine for yourself whether things are worth trading or not. And we cover everything from stocks right through to commodities and, of course, currencies. So let's just start with the economic calendar for the week ahead. Bank of Japan interest rate on the 22nd. United States FOMC economic projections and the Fed interest rate decision. Now, this is going to be interesting this month, guys, because there's an awful, and then the Fed press conference. This is all on the 22nd, which will be Wednesday, guys. There's been an awful lot of talk about tapering and how the market's going to react. And obviously tapering is the Fed starting to pull back some of that money that it's been pumping into the system by buying bonds, etc. So that money's taken off the table, or starts to be taken off the table. We could see a negative reaction in the stock markets. We don't know that that's definitely going to be happening, but let's keep an eye on it. Obviously, if you're already up to your eyes invested in the stock market, then it will just be a time for holding on, taking the drawdown, and then tinkering a little bit here and there, guys. Maybe taking some profits off the table before that happens. And of course, we don't know that it's definitely going to happen, but I think looking at a little bit of Bloomberg this morning, guys, it's red across the board so far today anyway. And I do think we will get a correction. We're not talking about a crash, we're talking about a correction, maybe 5–10%, and then it'll be happy days after that. But when that's going to happen, we don't know, guys. And you can't try and predict them, because they when corrections happen, they happen suddenly, guys. You're waking up one day and it's happening, and the next day and the next day, and it runs, guys. And then eventually prices get so low that the market starts saying, hey, grab a bargain and start getting back in. Now, what I've done with the portfolio is that I've held back about 30%. Now, I don't know if this is the right thing to do, the wrong thing to do, guys, but I've been holding back, up to 50% the whole year. And with hindsight, should have had it all in at the start of the year and then start to pare back as, as things have slowed down. But anyway, I've got about 30% in cash held back at the moment. So if we do get a drawdown, obviously those positions that are open are going to go deeper into the red, which is always horrible. But then you get the bounce back out of it again, and it's almost like a double whammy, because you buy in at the bottom, or where you think the bottom is. And as it comes back up again, then not only do you get green in those things that you bought cheap, but the things, the stocks that you have in the red start to come closer and closer back to break even, and you get this massive boost. But it's not about day trading, guys. That's about what's going to happen over months, over quarters. So we have to be patient. Okay, let's get on with it. That's a big day on Wednesday, guys. That's how we end up talking so much about it. Thursday, then, UK Bank of England interest rate decision. Now, we don't expect interest rates to move. It's just about how the Bank of England, how the Fed see things rolling out over the next quarter into next year, guys, and that will determine how people feel about the currencies and how they feel about the market. So it's going to be a big week. And then market manufacturing PMI flash on Thursday as well. And then inflation rate in Japan and business climate in Germany. Now, 24th, that will be, Thursday. Let me just see if I got my days right here. 20th today, tomorrow 21st, that'll be Tuesday, Wednesday, Thursday, Friday. This is into Saturday for some reason, guys, so we're not worried too much about it. Federal elect. Oh, there's an election in Germany. That's why that's up. So they must have their elections on Saturday. Not a bad idea because most people are off on Saturday, so they can go and vote. And then that's into next week, then, guys. So quite a lot happening on certainly Wednesday, and then a little bit on Thursday. So let's go over and have a quick look at the portfolio first, guys. Now remember, these are long, but I usually follow a bit of a a routine. So if you're interested in, say, the dollar, just you guys know how this works. Flash forward, go forward 10 minutes, 15 minutes, and then you see where we are in the charts. When we do the charts, we just do them in that order that's down the side there, generally speaking, guys. Okay. Right, quick look at the portfolio. It hasn't been great over the last few months. 2 reds there. We were in the green at the start of the month, but the last 2 weeks has just been negative. Now, I'm not complaining too much about being down, 1%, 1.5%, guys. But you do have to battle to try and, keep it at those levels and try and keep it as close as possible. August, we were down 3.5%, and we managed to battle back and get it up to just a little bit in the green. And then with hindsight, at the start of the year, maybe should have put a little bit more money on the table and then been taking it off now. But it is what it is, guys. We've only 8% for the year so far. The plan was for 20. I can't see it happening because I think it's going to be a bumpy ride over the next few months as well, probably into next year. But we'll see how that goes. We'll see how it goes. Maybe something starts to happen on the currency and we can gain something over there. But we'll work that out day by day as we go through. Just a quick look, and then while we're here, at what other people are doing, because it's always a good idea to look and see how other people are doing, just to either let you know that you've got a problem or to reassure you that the problem that you've got is the same one that everyone else has. So we'll go and look at Jay Nemes's, because my portfolio kind of looks pretty similar to his. And we're going to look at his stats as well. Obviously, his stats from a point of view, if at the start of the month start of the year, he was fully invested. Don't know what he hit in June, but he hit something, obviously. But the last 3 months, very similar to my own results. Between 1% and 2% drawdown, a little bit of a boost there in August, and then drawing it down again. So it shows me that on average, I'm doing okay. You can go and look at a few other people as well. Sorry, should have just put that back. Let me have a look at who else. Social investor. Let's go and look at Good Going, see what is it that he's doing that's different. Well, his profile's much different to mine. Got 5% last month. He's run at higher, 26% yearly drawdown. That's not for me. 502 copiers, fantastic. I haven't opened myself up to copiers yet. Maybe I should do. I was kind of waiting for a really good year and then get into it, but because I didn't want the extra pressure of 500 people going, "What's going on, Steve? Do you really need it?" Although they do pay out good money for this, so it is something I will definitely be doing with the account. But 26% drawdown just isn't for me. If we do go back to my stats so far as drawdown's concerned, 5% annual, guys, and that's what we're trying to put out here. A nice steady eddy. You're not going to get 50% return, but you're also not going to get drawn down by 50%, guys. So if you have a little drawdown of 5%, don't expect 50% return on the upside. So you get what you're doing. We're trying to show a nice, steady, competent way of trading here, guys. And then once you know how to do that, then you can decide whether, for yourselves, right? Here's the base level. I know how to defend, as it were. Let me now decide how I'm going to press, how I'm going to attack. And once you've got that, you can decide whether you're going for it or not. Okay. Right. So we're doing okay, not brilliant. We're doing okay. Right. So let's have a quick look at the charts. Let's come back out a little bit from there. We're not in a position at the minute to be looking at it on the 1 hour time scale. Well, the last time I did anything would have been around here sometime, by the looks of it, there, whenever I put that in, which was August the 27th. That seems strange. Wasn't that long ago, was it? Yeah. Anyway, there we go. Let's just clear this up a little bit. Got a new silent mouse, which is good in some ways. In other ways, you don't you don't know that it's necessarily working. So let's just move this over here, guys. We were looking for a drawdown from here, and we're getting one. We're certainly getting one today, guys. Remember, this is running on futures at the minute. So things aren't looking too good today. We'll probably get a bit of a drawdown. Maybe we'll get our 5% pullback. We could end up with something like that, guys. There's a good thing about a drawdown in that once it's over, you go, well, that's it, done. Let's pile in. Or once it gets down around here, maybe you start looking for individual stocks to start trading into. I suspect we could have something like this. Energy prices at the minute, natural gas is through the roof. That's going to have a massive inflationary problem. It's going to scare people. I could see a bit of a drawdown over the next few weeks. We'll have to see what the Fed has to say. This doesn't necessarily have to happen, guys. But remember, we're learning to be defensive. We're learning to be competent. We need to be careful of something like that happening, guys. If we go and look at the Dow Jones, it's doing the same thing. Let's just move this alarm line over. It's drawing down as well. It just looks to me like this thing's coming to a head. Not looking for something like that, guys, but it certainly could run flat for a little while before it starts to go long. And when things run flat, it's hard to make a profit, guys. You're then in the situation of trying to keep what you have. And S&P, I can't remember what that was about. It certainly wouldn't have been looking for a correction of that order of magnitude. Don't know what I was saying there, guys. But would not be surprised if yet again we got a bit of a drawdown and maybe a flat period before continuing on up into next year, guys. Nikkei, now I can't remember when that happened, but it was certainly what we were looking for, guys. Remember, we use Elliott here, not to the point where you're counting little ABCs, but just as a general overview. Use it as a skeleton to put your ideas on. Impulse, you get a correction. Provided fundamentals are still going in that direction, you're then looking for a breakout, and that's exactly what we were looking for there. So anyone who got into the Nikkei in the last couple of weeks will have been showing a really nice profit there, guys. What's next? Well, clearly, it's come into a double top. It'll probably come off here, guys. Can it push on through? Well, yes, but not under the current circumstances. I would say that it would take a nice little rest there and come off. And if it does that, then maybe you can start to look at trading it again. I don't know that there's too many things that I can trade on the Nikkei. Let's go to Discover. Global markets. Stocks. We've got an Apple for stocks. Hasn't Apple done well? Indices. Let's go stocks and then exchange. Hong Kong, Helsinki. See, I don't have any. There's no Tokyo there, guys. So can't really take advantage of that using eToro, guys. But there you go. UK index. Oh, wow, look at that. Now, that move is this morning. UK is open. It's live. I did say there was a drawdown going on, guys. And this is probably a lot to do with the energy problems. Government's meeting with the energy companies today to see if they need to give them loans to keep them afloat. So that's a bit of a panic about energy. Let's see how far it goes. Obviously, it's not going to be good for the account. French, same thing, guys. Let's see how far it gets. Now, remember, if you're brave, you buy the dip. You look for the opportunity. So don't be worrying too much. Germany down as well. This must have been the last recording I did, guys, which was the end of August. My goodness. I'm just throwing these in here, guys. Nothing at the minute. I see more downside to this over the next few days. China. Well, has China reached the bottom? And that's something we're going to talk about over the next, the next lot of sessions, guys, because I have a few Chinese stocks, ones that are listed in the NASDAQ, but nonetheless, the Chinese stocks. But some of them are down by 50%, not 50% from their high, not 50% for me. And is it time to start looking at buying them? They've become so cheap. Your Alibabas, your Baidos, that type of thing. But we'll have a look at those individually as the next lot of weeks go on, guys. The Hang Seng, big drawdown there again. You can take this. Just sort of using Elliott, the structures of Elliott, guys. There will be a push up in this. Obviously was expecting a move long from there. But we're still in this. This could be a bit of an ending diagonal here, guys. Like that, and then off it goes. We don't know yet. We're just gathering information here at the moment, getting an overview of what's happening, and then from there we'll start to make our decisions. Now, when I draw that, for anyone that's new, I'll draw that, meaning that's the zone to start looking at buying if you were going to buy, this particular chart. Now, I don't trade indexes, guys. But the point that I'm making there was when we were up here, I would have drawn this. You can see it's still there. And when it gets into that zone, which is close to there, that would be the place. If you were thinking about buying it, that would be the place to buy it. Now, you don't you don't buy the bottom of the spike, guys. You need to have a little bit of reassurance that it is on its way back up again, because you don't know where the spike's going to stop. And it certainly doesn't have to stop on that line. This could push on down and then start to come up. I'm not saying that's going to happen, but that is possible. So let's just keep an eye on it and see. Yet again, I don't think I can actually trade this. Not that I would anyway. Russell. Guys, the Russell, which is the small caps in US, been running flat the whole year. Running flat the whole year. Now, yet again, I can't trade those, but we look at it to give us information about what's happening in the market as a whole, guys. That's what we do here every morning. DXY. Now, I was looking for DXY to drop. I'm still looking for DXY to drop. Now, that doesn't mean that I'm trading it short from here. In fact, I've stopped trading currencies 2-3 months ago, guys, because around here somewhere, I think maybe it was in here, I stopped trading. I was getting them wrong and wasn't enjoying the process, and didn't, from a fundamental point of view, didn't understand where things were going and why they were doing what they were doing. Other than from back here, we said that this would run flat. Now, we did say that it could run, up like that, but we wouldn't have an impulse down and we wouldn't have an impulse up. It was going to be a corrective structure, which is what we've got there. The problem with that is that because it's corrective, it's very hard to get right in the short term. Now, obviously, with hindsight, you buy on the dips or you sell at the top. But hindsight's a wonderful thing, guys. It's much, much easier to trade something when it's running like that. That was a horrible period there. Or running like that, guys, or like this. and you have a fundamental reason why you're looking for that, as well as a technical reason. And we were looking for this. We were looking for this for a year and a half. And now we've got to the point where we're going, well, what's next? Well, I think there's probably more downside to the dollar. And so do an awful lot of other, so-called experts. But it's about the timing of it, guys, and it's about weighing up what the dollar's doing compared with what's happening in the rest of the world. And at the moment, there's very little happening. That, everybody's pumping money, pumping their economies. They're not necessarily printing money, guys, but let's not get into the technical details of it. But they're pumping money into the system. At some point, they'll start to taper that, because you can't borrow and borrow and borrow and borrow. We've got to start paying back at some stage. And we're getting near that point where payback comes. Then we'll start to see some differentiations, guys. Now, the dollar should be a lot lower than what it is, given how much money they've pumped in, and given that the interest rate is where it is, 0.25%, guys. But, markets aren't doing normal things at the moment, and that's because the world isn't normal at the moment. So it's pretty unpredictable now, which is the reason why I stopped trading currencies after having traded them for a good 3, 4, 5 years, guys. Now, it doesn't mean that I won't trade them again. It's just at the moment, it's not working for me. And therefore, we look at other things. Now, given that the stock markets are maybe going to go into a bear market, and I don't like shorting stocks, we'll look for opportunities in probably in currencies, but it might pop up somewhere else. Maybe there's some opportunities in crypto, but I'm not so sure, particularly after what Christine Lagarde said yesterday about cryptocurrencies. Basically said they're not currencies. And they're just really dangerous speculative bets. Having said that, there's an awful lot of money. People have made a lot of money on it. So euro dollar obviously will go in the opposite direction to what DXY does. But if we can understand DXY, then we get an angle on where all of the major pairs go. So at the moment, let's just go back to that, guys, because I'm doing a lot of talking without saying anything. Well, it's come back up to that range that we were talking about months ago, guys. And we did say that there was a possible downside, bottom of the range, maybe down here, but it didn't get round to breaking through there, guys. That doesn't mean that over the next lot of months it doesn't come to there, but I'm not predicting that at the moment. We'll have to see what Morgan Stanley and the rest of the boys have to say about that. Although a lot of times they've been calling a certain direction on the dollar, and I've called the opposite, and we've got it right and they've got it wrong, certainly over the short term. But maybe they're looking, over the next year, the next 2 years, what's the dollar going to do, whereas we're kind of looking what's it going to do this week, what's it going to do this month. So at the moment it's on the move up. I wouldn't be jumping into that anyway. There's no setup for it, and I get the feeling that there is a bit of a downside to it, but I don't know when it's going to come, guys. And therefore, it just makes all of these difficult to tell at the moment. So at the moment, I don't know what's going on. We'll watch it over this week, and we start to see get some idea of what's going on. Then we will, Wednesday, maybe it'll give us a direction on the dollar. Particularly if there's going to talk about tapering, talk about inflation, then we could well see the dollar pushing on up, guys. But let's wait and see what they have to say. So same with that, running flat. The Aussie had a little bit of a push up there, which is what we were looking for, obviously with the dip first. And therefore, listen, guys, one of the things you need to do if you're trading is particularly with currencies, give them space and give them time. If you're going to have tight stop losses, guys, then you're really going to be working hard and possibly getting it wrong as often as you get it right. So you're working for nothing. So you really do need to give them space. So in other words, have wide stop losses and put very small amounts of money on each trade comparatively, as a percentage. And low leverage, guys. my maximum leverage on anything is a currency would be 10, but even that recently, I'm thinking I'm down to 5, and with stocks 1. Don't be going any higher than 1 leverage, guys. So Aussie and New Zealand, yet again we were looking for this to push on up. We got the dive. So we'll see, see if the dollar pushes on up, guys. If it does, this will drop. But as it's my first day back, I'm certainly not going to be taking any, any chance today. We were looking for this to drop, went off in the opposite direction. I don't entirely know what happens on that particular day that made that happen, guys. Haven't been watching currencies, guys. Just been looking at my own stocks and taking stuff off the table. So what next for this? Let's see if we can. Now this is interesting, guys. When we got to that double top, I put that arrow in. And if you consider how it moved up the last 2 times, I wouldn't be surprised if this, didn't end up doing something like that. Of course, it could take off impulsively, but we don't know that. But if you were in it, get your stop loss to 0. Remember your trading strategy. And then if it does something like that, fantastic. Take your profit as and when, or trail your stops. Because remember, what we're doing here is it's just the skeleton of an idea, and then we build on that, and then we use our trading strategy to determine how much we get out of it, or how much we limit our downside risk. But that's interesting, guys. When was that from? That was from July. Oh, July 2020. Oh, I know what that is. That's the whole correction of DXY. Let's put DXY in there, guys. Oh, there's DXY there. Yeah, that's that drawdown DXY there. Nice if you were patient enough to trade it. And it was obvious what was going to happen from here. And now we're getting the corrective phase. Now notice there, as DXY pulled back, this didn't pull back very far. So there was a nice move there on the CAD against the dollar, even though DXY was pulling back. Now that's possibly, if you go over and look at the oil price, you could well see that the oil price will have pushed on up during that same period of time. I'm not entirely sure that it did. We would have to, let's take that out. Sometimes these don't match up nicely. Let's put USD, CAD. Guys, just, yeah, it's not going to play the game for us here, guys. Scale's too different. Can we put it to a log scale? See if we get it. Oh, that made it worse. Yeah, it just made it worse. Anyway, let's move on. So where were we? USD, CAD, USD, Swedish krona. That chart looks very similar to DXY, guys. Yet again, we were looking for a drawdown. I don't know if we're looking for a drawdown at the minute, guys, so I'll leave that alone. After Wednesday, listen, if the market doesn't react strongly on Wednesday in a positive manner, then we could start to look at trading the dollar back down within this range. But let's see what happens Wednesday first. And then that's just been running flat on a daily time scale for a long time, guys. Now, obviously, within that, there are opportunities. Don't know what I was looking for there. But you can see this is just running flat, guys. Let's just get rid of that alarm. And at the moment, the yen, just a move to safety. Let's see what the Swiss is doing. No, it's taken off in the opposite direction. But gold, let's see what gold's doing. See, gold's gone. Notice the Swiss goes the opposite direction to gold. Now, I've put a lot of money into gold. When I say a lot of money, I mean percentage-wise, guys. I've put probably about 10% of the account into gold or gold mining companies, etc., over the last few months, and it hasn't paid off yet. But if we do get a bit of scare in the market, then the gold price could well take a boost. There's an awful lot of talk out there that cryptocurrency, and particularly Bitcoin, has replaced gold. Guys, gold has been around since, well, long before people even existed on this planet. But for thousands of years, people have turned to gold as a store of value, guys. Not only does it not tarnish, it doesn't rust, it doesn't, it looks pristine today, whether it was mined 5,000 years ago or whether it was mined yesterday, it all looks the same, guys. And it'll stay like that forever because it's inert almost. Now, it reacts with a few things like mercury and what have you, but don't need to get into that. And there's a romance to gold as well. There's no romance to Bitcoin, guys. Gold will come back again, guys. I assure you it will come back again. Does that mean that Bitcoin isn't a thing? And of course it is a thing. But it's one of those things that could either keep going up or just go to nothing, guys. If all the power in the world was switched off for some reason, Bitcoin's gone, whereas gold's still there, which is the reason why a lot of people like it in an emergency. Okay, let's have a look at what's going on here. Silver, same thing, continuing to drop. It's been dropping ever since we had the big push up last year with the pandemic, which, by the way, we were predicting from away over here. And we're saying it's dropping, but look, it's in a correction, guys. Can it correct further? Well, it can, but I would suspect that it's going to stay in that range. So we're at the bottom of the range. It could well start to come up. Doesn't mean you jump in today there, guys, but it is something to keep an eye on and start to think about. Let's see what happens. If inflation is not transitory, could well see gold and silver starting to go long. Bitcoin, I'm no expert in Bitcoin, guys. I don't think anybody is. There's like everything, it's speculative. Coming off highs at the moment. Could it be that it's going to start something like that? I don't know that it is. But from a technical point of view, you would not be surprised if it ended up doing something like this before you get the next spike up, if it's going to give you that. You see what I'm talking about, guys? Big spike up, you need an equivalent correction before you get the next move up, guys. Does that mean it can't take off from there? No, it doesn't mean that, but the odds are that it's going to do that before it takes off. Go back and look at gold, guys. Look at it. This is on a daily time scale. You had your massive spike up, and then from there, which was May of 2020, you've had this correction. A bit of a rally, and then I did all right through that, but unfortunately I got involved again as it came off, thinking that it was going to keep getting up. And so over the last couple of months, I've been in the doldrums with gold. But if you look at the whole structure of it, take this and run it through there. Just not entirely sure that you can necessarily get a parallel line that would join up with anything. Just trying to show the structure there, guys, that we're in a big correction. Now, can the correction continue? Well, it certainly can. It certainly can. But what level does it come to before you get your next move up? And there will be a move up on it again. It could go from here, guys. Remember, we keep an eye on fundamentals, not just the technicals. So from a technical point of view, it could continue this downward run. And eventually, if it gets to, you know, a certain level, then the market goes, hey, gold's cheap. Let's buy that. Is that now? Well, we don't know. We don't know. But the more I look at this, the more I'm starting to think that maybe there's more downside to this. But, you know, what do? Do you sell everything? And this looks more promising because it's a flat correction as opposed to a zigzag, guys. I've just put Ethereum in there as well, guys. The two main cryptos to give us an idea. Also looks like a bit of a flat correction going on there. There's a bit of a turn down over the last couple of days. And one of the projects I got into while I was while I took my time off doing recordings is that I started mining a little bit of crypto, guys. It's just like, you know, couple of percent a week. Very, very small mining operation, couple of rigs as they call them, set up. And at current levels, they'll pay for themselves, despite the fact that everything's really expensive at the minute, guys, because of shortages. GPUs, etc., are probably twice the price they were a year or so ago. And they probably will come off maybe next year, but will Ethereum price still be high this time next year? So I just decided to take the plunge and invested about £5,000, what's that, $7,000, in buying a couple of mining rigs, and they'll pay for themselves this year, provided Ethereum doesn't drop like a stone. If it does drop like a stone, then you continue to mine and hold on to it until it comes up again. And then if you're looking to recoup your money as opposed to hold on to it long term, then you take your money out there. But if it stays at these levels, it'll repay itself within the year. And, you know, going through a lot of Reddit, you know, comment, reading what other people are saying, and there's a lot of negativity out there, guys. But these people, a lot of them they don't have any business sense. I've never been, well, I have. It's very rarely you get a business that'll pay for its capital expenditure in a year, give you a return on investment in a year, 100% in a year. Very, very rare, guys. So that's why I decided to get involved in it. I thought, my goodness, it's a year's risk. You get all your money back. You have all your equipment paid for. And then other than the electricity costs, which could, you know, hamper this project if energy prices go up any higher, then you've paid for your equipment within a year, guys. Yeah, I'll keep you posted on that and see how it goes. US oil. Oh yeah, we're on a daily. This is the 1 hour time scale. What are we looking at here? US oil. I don't recognize that chart, guys. That's why I'm. Oh, maybe I've been looking at it on the wrong time scale for me. So oil prices shot up. Do you remember way back here where they went below zero? I was caught out in this, guys. I was caught out in this. I don't... Am I on the wrong scale here? That's what it is. We're on a log scale there, guys. That's why I didn't recognize the chart. Yeah. So prices came up, got to a certain level, and then we said they'll stay up there, but they'll probably run horizontal. Well, given everything that's going on at the minute, guys, I suspect, and we're going into Northern Hemisphere winter, I suspect oil prices will continue to increase. But that's just off the cuff at the moment, looking at things in general. It's nothing specific. I'm not saying jump into this today, but if we do see some sort of setup on it, certainly we'll talk about it, guys. Let's just put an arrow in here, guys. EuroCAD. Okay, last time we were doing recordings, we were looking for an impulse out of there. We got one. Now it's just running flat. If the oil price does increase, you could well see a pullback from here on the CAD. But let's build up to that, guys. And I don't want to. I don't want to call anything today, guys, unless something's blatantly obvious. I'm not going to be calling anything today. We'll just build up our picture, as it were. Now, if we go back yet again to here, there's the circle. We were saying if this draws down into that level, in other words, that scribble's supposed to be the trend line, guys. If it comes down into the trend line, that would be a place to start thinking about buying this. Obviously, it didn't get there, but off it went. We at least got the direction correct, if not the buy-in. And now this doesn't have to do this, guys. But when things start to look like that, and you've got that, often you'll get the other side of it, guys. Now, I don't know what the reason at the moment, the reason why that would happen. And just looking at it technically, I'm saying that you could well be looking at a drawdown into that sort of area. Let's leave it there. We'll come back to it tomorrow. Maybe I've got a little bit more information, and we'll deal with it from there, guys. Yet again here, we had this drawdown. We were looking for it to go long. I don't know the reason why I had that arrow in. It could have been something we were talking about, saying, listen, this could drop. But the alarm line will always let me know where I'm looking for things to move, guys. And sometimes you don't know and just throw them out to one side. Euro yen. Well, look at that, guys. There's movement on the yen long at the minute. Let's go over here and look at it. Not showing up here, because this chart, although it's the yen index, it will reflect what's happening between the dollar and the yen more than anything else. So we go back down to here. So that doesn't necessarily show us as much information as we like from an index. That's why we really only look at DXY. Most of the time it's DXY we look at. It's been running flat for a while. But if we go back, Euro yen, guys, there is definitely a move on the yen today, guys. A move to safety potentially. We were looking for a potential move long a while back. Euro Swiss. It's a little bit of a turn there. Yet again, we were looking for this to go long. Given how this looks, the thing you need to be careful of is when has it finished? When has the correction finished? And is this the start of the impulse up? Well, possibly from a technical point of view, that's what it possibly looks like. But we need the fundamentals to be there before we're going to risk money on it, guys. So give us a few days to get our head around what's going on fundamentally before we make any decisions about what to trade there. And if you guys have an idea, obviously you can go ahead yourself. This is just me at the moment, trying to get an idea of what's going on. There's a pullback there on the Swiss. Let's see if we can see that anywhere else. Let's go US dollar Swiss. Not so much. Maybe the moves on the yen, guys, on its own. Pound CAD has just been running flat. Pull that out of the way until I get an idea of what we're looking at. Pound Oz. That was nice. Not sure where this is going next, guys. I'll just put that in there for now. Pound New Zealand, obviously, look at that. Well, the New Zealand's clearly been a little bit stronger than the Aussie over the last lot of weeks, or months, should I say. Let's look at it on the 4 hours. Just put that there. I don't know at the minute, guys. Pound Swiss, there's the little pullback there on the Swiss again. Is it the start of... Listen, at the moment, it isn't any different to how it's been moving for the last lot of weeks and months. But let's just keep an eye on it in case we get some big movement, on Wednesday, where you get a move to safety. And therefore, this potentially could be something. Pound Euro. Don't like to trade this, guys. I find it quite difficult to figure out what's going on with it. Pound Yen. Oh, looks like we've got a glitch. Pound Yen. Well, there's that move in the yen yet again. Let's put this in here. Possibly more downside to it. Let's see where it gets to, guys. Aussie yen, there's another move. There's a move in the yen, guys. Let's go and see an economic calendar. Ooh. Well, that's a couple of days away. Nothing major today. Is there anything in the medium side of things? Balance trade, Spain. Yesterday, New Zealand. No. Nothing I can see there. I'll have a listen to Bloomberg through the day and see if we can get an angle on why this is strengthening up, guys. Aussie, New Zealand. Right now. This was an idea that we had when it was dropping here. We thought that if it got down to there, we could look for a nice trade up. Now you can see remember we're on 4 hours here. You can see there that would have been a little trap, although, you know, if you caught that on a 4 hour, you'd probably been out of it again. But it's continuing to drop, guys. Let's go out to the daily. We had that spike there, but that spike was March 2020. That was the big, you know, the pandemic. So if you take that unusual circumstance out of place, we're kind of coming into, remember this is, well, there was another little drop there. That was 2015. So we're kind of getting to the point where you could maybe start to look for this pair to start going long again. But not today, guys. We're not talking about jumping into it today. Let's just keep an eye on this. I suspect this could start going long. But let's keep an eye. Let's keep it in the back pocket. Let's just keep an eye on it. Aussie Swiss, a little bit of a move down there. Now that looks like it wants to go long, but I wouldn't jump into that. There's possibly more downside to this, particularly since, well, we'll have to find out what's going on with the yen first. There could be a move to safety, in which case this could drop like that, guys. So be careful of that. Don't be doing anything with that yet. Look how we got that wrong. We were looking for a setup and that to go long, and what did it do? It went off like a rocket. But yet again, listen, guys, if your stop loss is way down there somewhere, and the only way to get it down there is either to risk, you know, a high proportion of your trade, or to reduce your leverage down. You know, if you're normally running 10 and you're not as confident as you would normally do, move it down to 5. Therefore, you can get your stop loss well out of the way without risking too high a percentage of your overall position size. And you know, with a bit of patience, you're back there. And not only are you back there, but you've made some money. Aussie CAD. Yet again, as we come down there, we were looking for it to move up, kept falling, and then off it went. This is the reason, yet again, why we talk about you need to have patience with these things. Swiss yen. Isn't this interesting, guys? So when we got this, I drew this. Completion of a zigzag, guys. Now, look where it is. It's completed. With that in the middle. In other words, they don't always immediately do what you expect to do, but if you take a step back from it, you will see the same structures over and over again. Now, is that complete and it's going to start coming long? Well, I don't know that yet. Possibly. Particularly if the gold price starts going long, then the Swiss will gather strength, guys. It's come back into there. Not that I trade levels, but we're aware of them. It's come back into the top of that, what people call support. I don't like to refer to it in that way because it's only support if it goes, guys. If it breaks down, then it wasn't. So there's an awful lot of ambiguity about those things. But it is something to note. and we will keep an eye on it because there is possibly a long trade in there. Now today's probably going to be longer than normal because this is me getting myself au fait with what's going on, guys. CAD Swiss. Don't know. CAD yen. There's the push down the yen again, guys. We'll have to find out what the reason for that is. If we go back and we look, each time it's spiked down, we've had a nice rebound off it. So are we looking for the rebound? Quite possibly. But I wouldn't do anything with any of these until we find out what the Fed's going to do on Wednesday, guys. New Zealand yen. Nice little push back again. Let's take our alarm over to here. Why do we not jump in there? Because this could well push further down before it comes up. And you don't want to be getting caught in that, guys. So let's just bide our time. If I think any of these are going to be worth trading, we will we'll put it out, and I'll put a chart out as well. New Zealand CAD. To be honest, I think this needs to come off. It's probably gone too high, although it does look impulsive. But you'd have to know the fundamental reason why you would want to do that. And given where energy prices are going, and I'm expecting the oil price to certainly at least stay where it is, if not push up, which will boost the CAD, then I could see more downside to this, guys. So potentially short there, but let's get our heads around it first. Not making any predictions at the moment. Yet again, this is tapering off. Could well be about to turn and start to correct. We'll not bother with the VIX. Yeah, oh, there's the yen yet again, guys. The yen against offshore China, Chinese yuan. And then just physical gold. There's physical gold still dropping. But it's still in this corrective structure here, guys. Moving long and short within it. I'm a little bit concerned that if this is all one structure, then obviously you could take that as your bottom, but it might not be. This could be, you know, we had that structure drop and went long, with this went long, and we've got this. Maybe there's a bit more downside before it goes long again. I'm looking for that, guys. Okay, listen, that'll do for today. Covered a lot of stuff there. Remember, guys, this wasn't about making any decisions here today. This is about me getting myself au fait with what's going on. There's a few things I want to find out, particularly what's going on with the yen, why it's strengthening. And we want to know what's going to happen on Wednesday with the Fed. And we'll build on this. Okay, guys, that'll do for today. Bye for now.